Good morning and welcome back to Almus Market Mornings. And if we thought maybe the US and Iran war wasn't enough for the Indian markets, which is still ongoing in a seesaw manner, we received a major update yesterday as the Indian government is to announce steps to draw more foreign investments by reducing taxes and removing caps on the ownership of some bonds. Post which we saw a sharp recovery in equities and USD INR come down partially as a reaction to this headline. Good morning, JK. Looks like we have a relatively heavy day tomorrow with firstly the RBI monetary policy meeting in the morning and secondly the important data points from the US in the evening. So what are you expecting from the strong end to this week?
Good morning, Eshan. Yes, it's going to be quite a heavy schedule from now on till the end of the week. Um, yes, we are going to have the key unemployment data from US tomorrow, expected to be reasonably good, and it follows, string of economic good news that we have seen over the weekend. Yesterday was also another day when the ADP employment report printed more than expected at 122,000. And it actually again puts on doubt the contention that the US labor market is weakening, etc. So there is diverse opinion. Some people feel that on the surface the numbers are looking good, but below the surface there is some weakness, like people who have not been seeking jobs and out of jobs are excluded, and so the unemployment rate is actually understated. That's kind of some views that are emerging, but market is going by the strong headline number, and even the job openings were much higher as per the Tuesday's JOLTS report. That also gave some good vibe to the market as far as the economy is concerned. Importantly, the services ISM report was stronger than what was expected, and in fact it was though it's a service-based data and has exhibited some sort of pessimism over the last several months over tariff announcements, etc. The headline number actually rose to 3-month high of 54.5, and new orders were higher, and the employment index was also better. Prices paid were higher, I mean, higher, but less than expected. So overall, the report was good, following on even the strong ISM manufacturing report as well. So economic strength is still around in US, and their asset markets are doing well. Although yesterday we did have the much needed correction to the market. So overall, it gives us a sense of strong economy, good performance by the asset markets. All these things, of course, even the war-related tensions, all of these normally should reflect in a strong dollar, but that is not seen actually. Barring against some of the EM currencies like in the Indian rupee, rupaya, Philippine peso, and mostly the some of the select EM currencies actually. But if you look at the major currencies like Euro, GBP, Aussie dollar, etc., dollar is still moving in a range. Yen is the only one which is tending to weaken more, testing the resolve of Bank of Japan to intervene near 160 level, where it is hovering right now. In fact, the Chinese one, as I have stated several times in the recent updates, has been moving steadily higher against the dollar and reaching its 2023 high as well. So dollar is not reflecting any of the positivities of the US economy. So that even if we do see some sort of a relaxation in the war situation and inflation eases, or the economy shows some sense of weakness, I would think that the bias for the dollar is to go down, and that is what is keeping whenever there is a rally in the dollar, people tend to sell that. So sense that I'm getting is the dollar is structurally weak, but the current ongoing tensions and the the strong economic number is keeping somewhat aloft. That is not to say that the war situation is not is rather benign. It continues to give a lot of uncertainties to the market. Initially there was some retracement in the oil yesterday when Trump said uh, he seems to be getting along well with the Iranian uh, head of the government. And he also said he would like to meet him and probably at some point, depending on how it works out. However, this immediately these were denied by the Iranian side, and market jitters continued, oil spiking once again closer to $99 as well. In fact, tensions increased when Iran launched ballistic missiles toward regional neighbors, Kuwait and Bahrain. So, on the war situation, there are mixed views. Some feel that latest Gulf flare-up overnight reinforced the market view that the current standoff is unlikely to be resolved diplomatically, and the negotiations stalled, and Iran showing little indication of making concessions. There's some possibility that there can be military escalation as well, and the attacks on Bahrain, which is one of U.S. Close ally and base, army base, is will be seen as a significant escalation. But anyway, renewed attacks by US seem to be a low probability. Although if that happens, dollar at 120, oil at 120 per barrel is not ruled out. But the more probable scenario for me is that, notwithstanding the fresh tensions, there will be a US-Iran agreement that will be a temporary truce rather than a lasting peace aimed at opening of the Strait of Hormuz, easing some economic pressures on Iran, and giving more importantly, giving both sides some relief without resolving the core disputes. The core issue of uranium enrichment by Iran or removal of sanctions or freeze on assets may only be partial. In fact, U.S. President had a setback, political setback, when the House of Representatives voted to restrict its ability to continue the Iran war without congressional approval as well. So the war situation continues to elude any clear solution, but what probably we are moving towards is some sort of a partial truce between the two countries, which can, probably help the oil flow through the Strait of Hormuz. And we hope that is what is going to happen and give a lot of relief to the market as well. As for the rupee is concerned, we did start off, on a very sour note. Stocks falling and the dollar rupee also rising closer to 95.80. But as we have heard over the past few days also that government is considering some concessions to the foreign investors for investing into Indian bonds through lower taxes, as well as opening up some of the categories of bonds for free investment without limit. These are being considered. There was even talk about the long-term capital gains, etc., being reviewed. So these talks actually surfaced by helping the market to recover, and then of course the dollar rupee also marginally recovered. I wouldn't say it was still some 30 paisa higher than where it closed on the previous day. My view is that any measures by the government is not going to come immediately. Possibly that will be timed along with some definite easing of tensions in the global scenario, without which the measures can actually fail, and then the authorities would be left with less number of tools if the rupee were to weaken afresh towards 97 and beyond. So I think this is in the air, but will the timing of this is not really certain. Possibly it can come if the markets start speculating too much on the upside of the USD and coupled with global relief in the global tensions. So I think we just watch out. It is in the air, but we do not know when it will come exactly. So till then, of course, the rupee will see some more weakness also, because the dollar is also strong and oil continues to trade closer to 100. Thank you.
Thank you, Jayaram. So, and just to summarize, the key unemployment data from the US is expected to be good today, as we also had the ADP employment report yesterday with good numbers printed, with also the JOLTS data coming on a positive number, keeping the labor market in the US on a positive note. And this in turn shows economic strength is still present in the US, with the asset markets also doing well, along with the war related tensions, which should be keeping the dollar strong, but not seeing as of yet as it still continues to move in a range. And a tentative partial truce could be signed just to ease off some of the political pressures can be made to hold off on the war and open the Strait of Hormuz, with the underlying dispute still being settled maybe at a later date just to get the operation started. And after starting on a negative note yesterday, with equities falling and the rupee almost going to 95.80, we saw a marginal recovery in the market due to the measures announced yesterday. But that being said, there could be a hold on these measures till the war pressure is somewhat reduced, making the timing of these measures very uncertain as of now. Thank you all so much for listening, and we'll catch up tomorrow with a fresh round of updates. Thank you.